Welcome back, YouTube. So we have some gap fills to discuss right now, and really getting some new points of whether or not we're going to potentially have these run, retest some of these upper levels, or is this kind of like all an illusion here just because we're getting some positive news into the market and getting some injections of cash? And is the news of Powell kind of next week? Is that kind of going to leave some speculation and kind of cause us to have a retreat with some of these runs? So we're going to get into that. But we're going to take a look at the charts first. So first up, we have Ethereum here. You'll see that we have surpassed our previous point of rejection. We kind of did, but we are opening up with the new candle for the day, and we're in the green. So we have filled, for the most part, this gap up here. There's several here in pieces, but the biggest one is going to be back here from June of last year. So ultimately, that has been filled. So it can get a little choppy above this level. But of course, we have a couple retest here at just over the 2,000 mark. So that'll be where we're on a positive note. That's going to be where we're projecting going forward. We'll get into the other side of this after I go through the numbers. So let's take a look here at BTC, the markets indicator. Huge run up here. Again, we're still filling this gap here because this was a monstrous drop, but we're certainly filling it in quite some type of fashion here. We're at around 27,467 at the time of this video. We can see some points here where it can get choppy once we get to around the high 29 ranges, around 30,000. But technically speaking, if we're filling this gap down all the way, this would put us at around 31,000 on the positive note. So if we do get that run up on the positive side, but with the hopium, that'll give us like another $3,000 run in Bitcoin. I'll look up Cardano really quick. That's the wrong one. There we go. So with Cardano here, we have broken trend, which is great. And we're looking at some retest here, which is currently where we are now. We didn't have that run up yesterday, put it at around 35. Starting the day out here at the new candle in green as well. We can potentially come up to around like this 37 mark before we can see our next point of like resistance. So we can kind of count that up, but we would certainly need what's this, around 38 before we can start talking about another gap. And this is just based off of the previous three tests. So we're still about 3 cents below that gap range. So we can kind of see potentially some price action like what we're seeing with Ethereum and Bitcoin. So that should possibly happen at around 38 mark. And then we could see us break into the 40s, but we're certainly going to need to kind of fill this range up here to around 38 before we can start talking about some gaps. Let's take a look here at Doge. So Doge, we're at the cusp of that first downtrend we had when we got rejected off of the old trend line, at least the old trend line to the downside, the old descending trend line, which is putting us like right below 8 cents. So in the event that we break that, this can put us at a projection here at around like the high 9 range. And if we look at this, just because it's choppy, that should put us almost to 10, I'll say about 9.5, because we have, let's see, 1, 2, 3, 4, 5, 6, 7 bounces off of this 937 line just in the last few months. So this can be technically be our range here. We'll certainly need to fill, what is this, from 777 right now where we're at. We would need to get to around 826 before, and then we can have that run up to 926. And that's kind of where we bumped our heads quite a few times over the last few months here. And then we can talk about that ascend to around 10 cents. We haven't been above 10 since like December. But with this run here, if again on the hopium side, that can put us in certainly in great position to retest like that mid 9 range to 10 cent. So, but we would need to get to around like the 829 mark. So let's take a look here. I want to take a look here at shorts as well, because always something good to keep in mind. Shorts are down. Shorts are down. Let's take a look at BTC. Yeah, same thing. Shorts are down. So I'll say this is somewhat of a more organic price action. There's always a little BS in there, but somewhat of some organic price action. So we kind of keep it at that. So going forward, the reason I said this is kind of with the hopium and stuff because we did get some bailouts of banks and stuff like that. And typically, anything associated with bailouts and cash and money flowing into the market, that has always resulted in a green market. That has always resulted in runs for the market. So this is what we're seeing in the market is not to be, in my opinion, I don't think that it's something to be celebrated as far as for reversal of trend or changing the macros or anything like that. I think this is a micro event, and you're kind of throwing some ice in a boiling pot, so it kind of drops the temperature for a little bit, but it's not changing the circumstances, right? So the heat is going to boil again. So that's kind of what I think is going on. We're going to get some ideas and stuff. The Fed meeting is next week. I think that will ultimately kind of set the tone for the next 30 days or so. And I think that's going to be the real indicator going forward. So I think right now what we're kind of expecting is there's a split between there being a pause and a 0.25 hike. Neither of those, I think 25% have voted for a pause, and around 75% are going with the 0.25. As of right now, 0.50 is out of the question, and anything as far as greater than that, certainly out of the question as well. So we're kind of expecting somewhere between there. 0.50 obviously would be a rug pull, so that would be I don't want to say FUD, but that would certainly be your panic for the market. And obviously, if we have another bank crash or some insolvency issues next week, that would also cause some fear to kind of go into the market. So overall, I'd say that what I in best practices is certainly not best to chase these numbers here and be like, oh my God, is this the bottom? I thought it was going to go lower, and start buying these green candles, because we do not have evidence here of a reversal or pivot from the Fed. And we're still giving away billions of dollars. So this is overall for um, inflation and stuff like that. That's a opposite reaction here that you can have long term. So don't buy the hype. Again, buy the fear, sell the greed. And buying right now, in my opinion, again, not a financial advisor, that would be more of buying the greed or buying the hopium at this point. So we'll see if we can maintain these levels here. But again, we have not. Right now, everything's looking like a rocket ship. It may look a little different by the time you're seeing this video. It's around 2 a.m. right now. So, if we can build up some support here, or get some, I'll say at least a cool down consolidation around these levels, then we could possibly have that conversation. But as of right now, while everything's a green rocket ship to the moon, that is a setup to get hurt if we're trying to jump in on that and thinking, okay, well, it's going to go higher, or I'm going to jump off right before it comes down. So keep that in mind. So I think that overall, we're going to see a shift next week, depending on the tone that Powell gives us. So as of right now, and that split between, but it looks like more than likely, I think we're going to get to 0.25. I don't think Powell is ready to pivot just yet. I think most importantly, outside of the actual numbers, is his inflation expectation or his peak interest. So I'm excited to get those numbers to see where he's thinking that our peak rates will be as of right now. So that is going to set the tone for the next cycle, the next quarter, really, is where we're going to be right now, and whether or not he's going to stick to that peak interest rate. So keep keep that in mind. Be safe out there with your investments. Keep your ear to the ground. If you like anything, share this video, subscribe to the channel, and I will see you guys in the next video.